welcome back to Market on Close. It's time for Options Corner, so we'll welcome in our friend Kevin Green joining us with the levels that he's watching as we head into the close today. You know, Kevin, what are you keeping a close eye on? We've got S&P still up, but everybody else down.
Yeah, we did see a little bit of a round trip today, Marley, when it comes to the market. Actually, earlier this morning, we talked about the 65.55 as a potential area of resistance, and we pretty much hit that on the nose and then started seeing a fade pretty much throughout the remainder of today's session here. Now, I think where we are trading at right now, around the 65.20, is going to be very key going into the close, just based on the options positioning. But you could see that we did have this failure and came back and tried to retest the majority of this gap that we created, at least for today, which is not outside of the norm, coming back, retesting, maybe some buyers really do step in here and we continue to move higher. If we're kind of going into the close, 65.20 is actually the first area of major support that I'm looking at for a potential bounce here. Any failure, you're looking at 65.10, and then from there, you know, maybe the market has a flush going into the close here. Right now, once again, based on the options level, we are trying to hold this particular level. And you can see the consolidation that's taking place, at least for now, some pretty decent candles that are taking place, along with the volume kind of increase. And we've been in this descending channel, which is obviously bearish, but if we're able to break above, let's just say that 65 30-ish area, break above that, you maybe could see a little bit of a squeeze. So overall, you are just seeing an unwinding of some of the bullishness within the market. You did see Oracle obviously outperform to the upside, NVIDIA doing a phenomenal job, but they have faded since the start of today's session, giving up some of those gains, which is kind of putting a little bit of pressure on the S&P 500.
And what else are you watching, Kevin?
Yeah, if you're kind of looking at the tech sector versus the utility sector, we actually did see utilities actually outperform tech, which actually was remarkable today. Now, there was one utility company, CEG, or Constellation Energy, that was up around 6%. But even if you're looking at some of the traditional names that are out there, the Duke Energies of the world, or even NextEra Energy, they also performed pretty well today. Now, obviously, we're making new highs for the S&P 500, but you would think that on a day like today, with Oracle up over 40% at one point in time, and semiconductors doing a phenomenal job, that tech would actually outperform utilities, and that just was not the case. Now, this is not an overall sign that says that this is the top in the market, but this does kind of show and signify the fact that we did see a little bit of a broadening out that could be taking place, and then also that we had kind of a little bit of a round trip when it comes to the intraday moves for the S&P 500 and some of these tech names here. If we do have continuation going into tomorrow, I would be a little bit more concerned about that, Marley. You are seeing volatility also creep to the upside today as well, leading into the CPI report. So maybe a little bit of a rotation, defensive positioning, but the outperformance today, just given the fact that we probably saw one of the strongest days, if not the strongest day, for Oracle, as well as maybe some of these other names, the fact that we kind of gave that up and saw defensive trades actually outperform is something to note. And actually, you see utilities doing the same thing, outperforming information technology, which is also kind of a head scratcher today.
So no cause for concern yet, but if we start to see this continue on the charts, then we might need to be a little bit worried.
Yeah, just a tad bit worried. I mean, you have a couple of charts that have set up for some bearish weekly setups. Actually, utilities is one of them. That is obviously, once again, having a strong day. But if you look at the weekly, they do look a little bit weak, as well as industrials setting up for a potential bearish cross on the weekly chart by the end of this week as well. So, you know, a couple of sectors kind of giving up some of this bullishness, but nothing to be too concerned about until we fade or basically trade below the 20-day and the 50-day moving average, go below that 6,200 level. I continue to talk about that. I think the market continues to make higher highs as well as higher lows.
And as far as volume today, you know, was it higher than normal, lower than normal, average?
I would say it's actually fairly average, and actually if you kind of look at the difference between the up volume and down volume on the NYSE, given the events that we had today, once again, a lot of shares being traded for Oracle, but if you look at the difference, kind of a muted day. So nothing that really suggests, once again, a breakdown in this market, but nothing really suggests also a lot of enthusiasm on a broad-based scale here. It's kind of within range. I think tomorrow we probably will see potentially an outsized range day, either to the upside or downside. I think there's more of a risk or a catalyst risk to the downside given the events that we have tomorrow. But we obviously have seen economic data be really good, like PPI earlier this morning. The CPI should actually reflect some of the PPI effects that we saw for last month, which was actually fairly aggressive and pretty hot. So I think the market's probably bracing for that, and you can see that within the vol space in general as vol is actually inching up here today.
And we got PPI this morning, lower than expected, but we're going to have CPI tomorrow. We usually see some of this reflected in the 10-year. I'm looking at it today. Are we seeing investors chasing bond yields ahead of that report coming out?
Yeah, I mean, we did have yields actually move up yesterday. Today, we did see some buyers really stepping in, getting in front of that rate cut narrative, and even pricing in potentially 75 or even 100 basis points by the end of this year, which I still think is a little bit far-fetched given the fundamental landscape that we have on the macro front. But from a technical standpoint, you can look at the 3.97% area for the 10-year Treasury yield as your key firm area of support. Now, what gets actually very interesting with this technical setup, because we have had some aggressive moves to the downside when it comes to yields, meaning that buyers are stepping in and purchasing up these 10-year treasuries, we could actually have a rapid move or re-rating back to the upside once you hit this critical area of support, which once again, I think tomorrow is going to be that catalyst for us to really determine if we are really going to continue to break down on the treasury front, especially when you're looking at 10s, 20s, and 30s, or do we actually see maybe a backing off of some of this aggressiveness and optimism when it comes to rate cuts for the remainder of this year?
Kevin, we appreciate you breaking down all the options action for us, and we'll see you a little bit later in the show for our closers panel once the market closes for the day.